Hello, good morning and welcome to ET Now's very own The Newspaper Show with me, Varun Hirimat. For the next half hour, we'll be walking you through all the headlines from the Economic Times and the Times of India. But before we do that, let me remind you that the newspapers are completely safe. Please go to wantmypaper.com. I repeat again, wantmypaper.com. If you're interested in getting the newspaper delivered to your residence, we assure you that all the proper precautions and safety measures are being followed. So once again, wantmypaper.com if you are looking to get a newspaper delivered to your residence. But with that being said, let's now get a move on to the top 10 stories of this morning, beginning with the fact that Adia has redialed RIL for $1 billion Jio Fibre play. Jio Platforms gets 43.5 thousand crore from FB. June consumer goods sales at pre-COVID levels. India readies gift for Hong Kong investors. Banks in a spot due to China Logjam. India raises students' issue with the US. Nilekani says Infosys gaining in consolidation. FM to CPSEs boost Capex to accelerate recovery. Defense Minister reviews border infra projects. And North Indian states facing rain deficit. Let's now segregate them, corporate and market, beginning with corporate. Auto cos to give bonus to workers. Bajaj Auto sets rider for 50% pay. GMR sells 49% stake in airports business. Apparel sales still out of fashion. And Unacademy buys Prepladder for 50 million. Let's now move forward to the market stories. Shut Franklin plans to get 3.2 thousand crore more. RIL Lupin among Nomura's top picks. TCS to show more resilience versus peers. Maruti to gain as demand for hatchbacks revive. And okay, so those were the individual headlines that we had to bring to your attention. We now will move on to the first story, page 1 of the Economic Times. ET reports suggest after putting 750 million to work in Jio Platforms, Abu Dhabi Investment Authority has now revived its discussions with RIL to invest around $1 billion in its pan-India fiber assets. Ajay is joining in now with more. Good morning, Ajay. Take it away.
Good morning, Varun. Yeah, that's correct. The moolah just keeps on rolling in for Reliance Industries. And just after last evening, Reliance announced that they've received the fund from Facebook, almost 45,000 crore. This morning, we learned that another $1 billion wanting to come in the Jio business, but not the Jio platform. It's the fiber business, which is Jio, but another unit of Jio, about 57,000 crore worth of money from Sovereign Wealth Fund, Abu Dhabi Investment Authority, Adia, have revived their talks with Reliance. Remember, this is not absolutely new, but they wanted to invest in it earlier as well, but the talks were put in cold storage over some other issues. But now, now it appears that things are solidifying once again, and they want to not only put money in platform business, which they've already done, but now they want to invest almost $1 billion in the fiber business as well, because that's where the high growth is, that's where visibility is in a post-COVID world, internet usage, etc., going through the roof. And Reliance, there can't be a better execution of large projects like Reliance, so might as well top up your investment there. So that's the kind of transaction perhaps which is brewing as per ET this morning.
All right, you're absolutely right, Ajay. The tap just keeps on flowing. The moolah keeps rolling in for Reliance. That counter should be active once again in trade today on the back of this news. But thank you so much, Ajay, for joining us this morning. Let's keep it with Reliance, but with a previous deal of theirs. Jio Platforms has received 43,574 crore from US social media giant Facebook in exchange for a 9.99% stake, marking the culmination of a deal that was possibly the largest FDI investment in India's tech landscape. The Jio Facebook deal was the first of 11 deals made by the Ambani-led RIL as a part of their mission debt-free. The Competition Commission of India has approved Facebook's investment in Jio Platforms less than 2 weeks ago, and Jio Platforms has allotted shares to Jadoo Holdings, which now holds 9.99% of Jio Platforms' fully diluted equity share capital. So that's on page 4 of the Economic Times. Please do have a look if you're interested. Okay, the next one relates a little bit to what's happening in Hong Kong, and according to an Economic Times report, India is keen to take advantage of the unrest in Hong Kong and draw businesses looking to move out of the island enclave to its own international financial services center at GIFT City in Gujarat. The government is considering measures to make the IFSC more attractive toward this end. So it's going to basically create a financial hub. India is keen to take advantage of unrest in Hong Kong. India readies gift for Hong Kong investors, government to make IFSC more attractive for investors, and Injeti Srinivas appointed as first chairman of the IFSCA. All right, the next one that we're going to be talking about, I believe, is the delay in customs, and this is on page 1 of the Economic Times this morning. Delays in customs nod disrupt Chinese brands and India plans. Companies forced to cut bulk imports from China while shipments have been held up. Electronics and appliance makers said production was hit last week for 3 to 4 days as imports were held up. Though consignments have started moving, the backlog has led to shortages and disrupted output. So that's on page 1. Do have a read again if you are interested. Okay. We're now going to switch gears, page 4 of the Economic Times, to Motown. And auto majors plan to give bonuses, pay hikes to boost staff morale. Kia and MG Motor have already given variable pay, while Mahindra and Mahindra, Hero Motor Corp, Ashok Leyland are expected to do so in the next month. So Utkarsh is here with us. Good morning, Utkarsh. Welcome to the show. Could you walk us through some more details?
So as you said, what's happening around the country is what's happening in Motown as well. That there's a shortage of labor, and given the fact that a lot of workers have moved back, and secondly, the kind of cases which are coming out, we have heard what's happening in Bajaj, what happened in Toyota, in Bengaluru, in the Skoda plant in Aurangabad. There are cases in every plant at this point of time, and workers are really scared to come to work despite all the social distancing norms being followed. And this is one of the ways really that the companies are making sure the supply is not hit. Now, MG and Kia, as you said, one, remember the new entrants, they have much lesser and smaller production facilities and lesser number of employees and workers, both as a Mahindra, Tata, TVS, or any other mass manufacturer. So MG and Kia, it was much easier to start from. Obviously, for other companies, it will be difficult, but everybody is just looking at a way to really make sure that the worker comes in. Either is it by telling him that, there are all the social distancing norms which are being followed. Now, one other way is obviously, the way other companies are doing that, the cutting pace if people are not coming. So it's really the way it is right now is everybody is struggling to make sure that people come in, and the workers are scared of coronavirus, so somebody is using a carrot, somebody is using a stick. But all the automakers at this point of time are making sure that they try to get as much supply and production possible from their plants. And for that, they need the employees, they need the labor.
Most definitely, Utkarsh. They are the backbone of any industry, and I think it's any organization's prime objective right now to make sure that the workforce is happy and showing up to work. So thanks for that very important update from the auto sector. But with that, let's now switch gears to consumer goods sales. According to ET, sales of consumer goods rebounded in June to levels seen before the lockdown, giving some companies the confidence necessary to forecast single-digit top-line growth in a quarter or so. This is expected to have been a washout for other pockets of the economy, but Vinny, who tracks the sector really closely, is joining in now. Good morning, Vinny. Welcome to the show. What does this mean for consumer companies?
Good morning, Varun. So, if you go to see for consumer goods, especially FMCG companies, they have seen an increasing growth on a month-on-month basis. And that is what is, they're seeing in the month of June. They have rebounded to June, in the month of June to sales level before the lockdown. So, that's pre-COVID levels. And that would, give them a forecast in single-digit top-line growth for the quarter for FMCG companies. Now, obviously, for in consumer Godrej Consumer Products Limited did say that, while urban areas and retail areas are still a bit, operations are not fully recovered, but the overall demand is quite steady, and the wholesale chain which is there for consumer products is doing quite well. And, that is the spine of the business for most of the companies, where the wholesale chain is doing well, and they have seen a recovery there. Even Marico said that, while Q4 was a bit weak, but they are seeing demand bounce back in Q1, and that is what they expect a better trend to continue in FY21. Once the lockdown also is easing, they will be seeing better growth, especially in this quarter there was a lot of panic buying also, so that is also there. That's something consumer durable companies have consumer good companies have seen. Now, talking about consumer durable companies, that's a bit of a different story. Their capacities are back to 95 to 100%, but the sales growth is still slow, and they have not seen that much of a recovery in sales growth terms for consumer durable companies. Like LG's June growth was 15% higher than its last year's sales, but for Sony it was similar to TV sales was similar to the last year's sale. Especially for Panasonic also, refrigerators expanded the fastest fastest ever at 43%, and television was also by 50%. But this is maybe due to the pent up demand that we are seeing for consumer durable companies. But overall, consumer goods have seen sales come back to pre-COVID levels.
All right, Vinny, thank you so much for bringing us that good news of the day. Seems that we're all getting back to our old ways, as much as possible, obviously, within the constraints that there are right now. That was Vinny on consumer goods sales picking up to pre-COVID levels. But let's move forward right now. Page 3 of the Economic Times. According to the Economic Times, Parliament members travelling to Delhi to attend standing committee meetings will be treated as government officials on duty and exempted from quarantine rules of the state. The rules meant to facilitate regular meetings of parliamentary standing committees were formulated by the Lok Sabha and Rajya Sabha secretariats. Following demand from the opposition to exempt MPs from quarantine, rules have been laid down to ensure that those attending House panel meetings would not have to undergo any institutional quarantine. So, running the country is its own job, and obviously some special exemptions have to be made for key officials who need to be present in certain places to vote or take certain decisions. So it seems that they're figuring out a safe and healthy way to do that. Page 3 of the Economic Times if you are interested. Okay, let's move over to page 9 now. FM has urged CPSEs to boost Capex in order to accelerate the recovery process. Agency in implementation, she directed the ministries and CPSEs to flag any unresolved issues to the Departments of Economic Affairs or Public Enterprises for an immediate resolution. So that's quite self-explanatory. We're seeing a lot of proactive measures kicked in by the government and the finance ministry, and it seems that she's urging the CPSEs to deal with any unresolved matters so that they can get a move on with all the various items on the agenda. Okay, page 9, yet again. The worst seems over for India's job market. The Centre for Monitoring Indian Economy has said, adding that the country is likely to settle at an unemployment rate only slightly higher than that seen before the COVID-induced lockdown. The unemployment rate stood at 7.76% in February, a month before the government implemented the first nationwide lockdown starting in March. So that should be your benchmark rate for something we should come back to and normalize whenever that happens a quarter or two down the line, no saying. Okay, with that, I believe we're now done with all our individual stories for this morning. Let me just quickly get you a top 5 from the Times of India, beginning with the fact that 1.6 lakh cases and the toll is now 3.2 thousand in the first week of July. Mumbai opens COVID test for all. Mumbai's death toll higher than China's. CPSE syllabus for class 9 to 12 reduced by 30%. And after India move, the US may also ban TikTok. So those are the top 5 interesting headliners from the Times of India. Okay, now as part of our ET Q&A, let's get you a little quote or a paragraph in rather from Dan Schulman, who's the CEO of PayPal. We believe the digitization of currency is only a matter of when and not if. Currency is going to be digitized and has to be supported not only by players like us, but also supported by governments and regulators. Most importantly, they have to be adopted by consumers. If consumers don't adopt this and feel safe, secure and convenient in using digital currency, it'll never be a big thing. So that's an interesting word coming in from the PayPal CEO, although he may have his vested interest as far as digital currency is concerned. Okay, we still have some more for you lined up actually this morning. We're not done. Yes Bank has announced a fundraise. The board has approved a fundraise, but no final quantities have been disclosed just yet. However, Neha, who's tracking the story closely, is now with us. Good morning, Neha. Welcome to the show. Take it away.
The board of Yes Bank has approved fundraising via a follow-on public offering or an FPO. The bank, in an exchange filing yesterday, said that the capital raising committee of the board has approved fundraising by way of a further public offering. The bank also said that the committee will meet on or after July 10th to approve details such as price bands, discounts, amongst others. Meanwhile, sources have confirmed to us that the bank is looking to raise rupees 15,000 crores via this FPO. If you remember, the bank had already received approvals from both its board and shareholders to raise capital up to 15,000 crore in March this year. Our sources have also told us that the FPO is likely to hit the market early next week. This FPO will be Yes Bank's second round of fundraising. In the first round, Yes Bank had raised rupees 10,000 crores from a consortium of private and public lenders led by State Bank of India as part of its restructuring. The bank is in dire need of funds. It needs to boost its capital base. If you look at the capital adequacy of the bank, it stood at 8.5% as on March 31st, 2020, which is below the minimum regulatory requirement of 11.5%. If you look at Yes Bank's CET1 ratio, it stood at 6.3% as against the requirement of 7.375%. So the bank definitely is in need of funds. The bank's non-performing assets have been on the rise. Along with that, bank's deposit base has also contracted over the last few months. Like I said, sources have told us that the bank's FPO is likely to be launched early next week, and we will bring you all the details. It will be interesting to see how investors respond to this FPO.
It will be very interesting to see who, how much, when, all of that. But with that, we're now nearing the end of the newspaper show. As usual, before we let you go, we always get you a special segment for news for the hearing impaired. Let's tune into that.